Hey, good morning. Let's go over today's trade plan. So in the overnight session, responsive buyers were active at the 57.5 to 60 support area, which marks the actual balance breakout area from a couple of days ago. And at this point, the zone has become even more important with multiple lows at 57.5, and it also served as the launching point here in the overnight session for a pretty decent move back up into 71 to 73. At this point, heading into the open, the buy side is back in short-term control, and we are going to be using 64 to 66 as the initial support area. So on a pullback to 64.66, it's a spot where buyers can be active yet again if the market is strong enough to really push back up towards the recent high at 78.25 to 79.75. Below that, 57.5 to 60, like I said, is very important at this point, and that's really the zone that needs to hold. Now, ideally, if the market is truly strong, we don't even go back down there. And that's why, 64 to 66 can actually hold, and from there we can just continue back up into 2076 and then 78.25, 79, 75. And if we are balancing up there and we're holding some pretty decent momentum and broad market strength, then there would even be potential for a breakout above 78.25 to 79.75 for a test of the 85.5 to 87.5, where responsive sellers can be active on first test, especially if the market is short-term exhausted into it. And then beyond that, we have stronger resistance at 92.25 to 94.25, which is a larger time frame area of resistance, and at this point would also mark a range extreme, so it would be a automatic short in the event that the market actually got all the way up into it. And then we even have a little bit of resistance at 89.5 ahead of it, but 92.25, 94.25 is really the main spot up there and the larger time frame resistance area. So at this point, heading into the open, like I said, the bias is more bullish than bearish, and this short-term resistance at 71 to 73 really needs to be taken out in order for the buyers to confirm that they are indeed back in control. And if we can get beyond 71, 73, then we could see some more acceleration to the upside into 78.25, 79, 75, with the potential to break even that zone. Now, in order to break that zone, we are going to have to see continued upside momentum and broad market strength, of course. Without that, the market can actually remain within this balance, which at this point is 57.5 up to 79.75. So it doesn't mean that we have to punch through that zone right away. We could balance a little bit before we actually get another break through the 78.25, 79.75. But right now, the time frames are more aligned to the upside. We just need to see some buying come into the other markets, because right now the way the market is established, we are treating this 57.5 to 79.75 as its own newly developing balance area. So, in order for the market to continue going higher, like I said, we do need to see some buying coming into the other markets as well. Now, on the downside, if the 57.5 to 60 area fails and does not hold, then we would be breaking below essentially 3 days of balancing. And at that point, the short-term control could shift to the sell side, and we can quite easily go down and tag 48 to 51, and it would open the door for a test of 37.5 to 40.5. Now, first test of 48 to 51 can still attract responsive buyers. We don't necessarily have to completely fail and break down, but if we fail at 57.5 to 60, then we certainly have to exercise more caution on the long side. And like I said, it doesn't mean that we can't fade and go long, but ideally you want to see the market short-term exhausted into a zone so that you can at least get a little bit of price edge and allow the trade to work out. And then 48 to 51, if that gets taken out, at that point we would have confirmation that the sellers are in control, and from there ES could go down into 37.5 to 40.5, and that would also mark a short-term range extreme, so responsive buyers can be active at that zone. So those were the main ideas heading into the open. Let's keep an eye on how the market reacts to 64, 66, and the final spot being 57.5 to 60. You don't want to see too much weakness off of this pre-market resistance zone. It does mark the high volume node of this newly developing 3-day balance. So, a little bit of pause and response over there is perfectly normal. But if you continue balancing near it and testing it, then it would open the door for a breakout through 71.73 for a test of 78 quarters, 79.75, and possibly higher, depending on how the day develops. So those are the main ideas. Let's see if the buyers can really maintain the control that we've seen here in the overnight session, and we'll take it from there.